Hello everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Tuesday the 10th of June. I'm going to look at sterling dollar now, and sterling dollar continues to remain in this downtrend, and the downtrend resistance once again proved to be decisive yesterday, capping the upside, and also we're still firming up the resistance of this old primary uptrend as well, which is suggesting of two resistance of trends there. Also, we've got these momentum indicators, which you've got that higher low that was back towards the end of May, and these potential lower high in late May, and another second even lower high on these momentum indicators as well. The MACD lines are not really showing too much sign of turning up. Just could be kissing to turn down once again, which would be bearish. The stochastics are also in an area where they're in bearish configuration as well. So the corrective outlook is certainly there on all these momentum indicators, suggesting that this downtrend that we've got over the past month is going to continue. And on this intraday chart, there's more detail of this. You've got this, as I said yesterday, you've got this big base pattern on the intraday chart that lasted several days, which actually gives us an implied target back towards 68.60. Mentioned yesterday that often in bear market rallies, the base patterns don't quite meet their targets on the upside, and 68.44 was the limit on Friday. And yesterday we saw a high at 68.32, so that's again a lower high, which if I drew in that downtrend, that's over the past few weeks, or the half of that downtrend anyway. And that suggests that the pressure that we saw yesterday on this 67.80 neckline is increasing, and certainly with these lower highs in place now, you've got lower highs on the RSI, which suggests loss of momentum. You would suggest that you're going to get a bit of a convergence on this level at 67.80, because you've got the lower highs of this downtrend that come in. That downtrend currently comes in around 68.30, and then you've also got the move or the convergence towards this key support of that neckline, and that's at 67.80. So you've got 50 pips there of where that possible trading band can still move in today without a serious test either way. But I think that test is going to be coming in the next day or so. So with the fact that these momentum indicators on the daily chart show lower highs and lower peaks, and also the fact that you're finding resistance underneath this old primary uptrend, and resistance at this new downtrend as well. I think that it would suggest that selling into strength is the way to go, and I think we're going to get a serious test of this 67.80 mark. So just watch that in the next day or so. Anyway, I will speak to you later, and I wish you good luck in your trading on cable. Just as a stop, maybe 68.44 is certainly looked upon as the initial turning point, I suppose, for the bulls to regain control. But to be honest, as with this daily chart, you wouldn't really start to get too excited until you broke above that 69.20, which was that lower high on the daily chart. Anyway, so I said I will speak to you later. Thank you.